Investors are also awaiting news out of the China trade story. Next round of talks later this week. Mnuchin and Lighthizer headed to Beijing. Meanwhile, British Prime Minister Theresa May's next move in the UK's exit from the European Union, also a focus. Here's what President Trump told me about key issues on trade in my interview with the president last week. You said that the tariffs are going to stay in place for a substantial period of time. Is there a snag in these negotiations?
No, not at all. But we have, if you look at technology and the first $50 billion of goods, we want to keep that, and because we need that. You know, we have what's called the chicken tax. You know what that is? Yes. On the small vans and trucks and different things. And that's a great thing for us, and that has to do with the automobile industry. That's the best segment. People don't know. We get a 25% tariff on that segment. That's our best segment by far.
If you slap more tariffs, if you slap tariffs on auto and auto imports, doesn't that affect the global stream of goods? Doesn't it slow down the economy? It's expensive.
Yes,
and
but you know what it does? I'll tell you what the end game is. They'll build their plants in the United States, and they have no tariffs.
Yeah, but what if the Europeans come back to you and say, Mr. President, let's go to 0%. Let's go to no tariffs. Are you willing to give up that 25% tariff on light trucks?
No, because a Chevrolet will never sell like a Mercedes sells here. They've offered me that. They said, oh, I have an idea. We'll go, no. Well, the problem is that the Chevrolet will never be accepted in Europe like the Mercedes is accepted here. So it's not a good deal. I wouldn't do that deal. They've offered me that deal.
So you wouldn't do zero tariffs with...
I would do it for certain products, but I wouldn't do it for cars because they have BMW, they have Mercedes, they have a lot of very good cars that come in. And they make them here. I want them to make them here. Instead of making them over there, make them here. If you're going to sell them to the Americans, make them here.
Joining me right now, Wells Fargo Asset Manager, PMV Equity Team co-lead, and Miletti. Great to see you, Ann. Thanks for being here.
Thanks for having me.
How important is this China trade deal that they're going to be working on this upcoming week?
I do think it's important because investors have been anticipating it, and it could be the next catalyst for growth for the market. So I do think it's pretty important.
Liz, do you think that they're going to be able to come up with an enforcement to keep China from stealing IP? I think that's one of the linchpins to any deal, because we know that the Chinese are willing to open up their markets for financial services. I understand J.P. Morgan's about to get a big win in that regard, and we know that the Chinese are willing to buy more stuff, soybean, et cetera.
Yeah, this is the big hurdle. This is clearly the thing that they've been working on for months now, and everyone is very skeptical about it. So it is obviously very critical to see this deal concluded, and I think it's going to be helpful to the markets. But in terms of enforcement, my optimism about this stems from the fact that we have incredibly good people working on this. Lighthizer and Navarro are tough. They're experienced. They know what they want. They went in early on with this objective of establishing protections for intellectual property for American companies. I don't think they're going to back down on that. So that is clearly the big issue.
And trade or otherwise, what sectors are you looking for in U.S. stocks for growth?
Well, you know, right now it's been pretty much a bottom-up stock pickers market because a lot of areas in the market have risen. Some, you know, at the beginning of the year, but some of those areas are the ones that fell the hardest at the end of last year. So industrials have risen in anticipation of this deal. So now it's a little bit trickier because if we don't get the deal, then it's going to be investors want to hide out where there's some safety. So what we're doing is trying to find areas that could work regardless if the deal happens or not. It's going to be tougher because we're going to, you know, be in a slower economy, I think, if we don't get the deal as well. So again, from a bottom-up stock selection, looking for, you know, those stocks. So an energy stock, which is kind of surprising because you would say energy is impacted by global, but a company like Noble Energy, which has a big natural gas deal going in the Eastern Mediterranean in Israel. They've put a lot of capex in that project, and that capex is lightening up. And the cash flow inflection's coming in a big way. We expect $500 million in free cash flow in 2020. That's going to inflect, and the market's going to start to realialize that.
Look, so I don't think we could talk about markets without talking about rates and the pivot that we saw from the Federal Reserve. Jagan, real quick, how do you see it?
Really, what about financials? With the yield curve inverted for 2 days in a row between the 3 and the 10 makes it real hard. It makes it impossible to make money on loans, quite frankly.
It does. I mean, it's a difficult place to be right now. I think, you know, the longer it stays inverted, the more difficult that becomes. But again, it's not just one factor. I think if you get the trade deal, you're going to get hopes in the market that you're going to see a global, at least a domestic recovery and hopefully a global recovery. And then the changes of that curve, will inflect. You'll start to see financials recover. So we would be more positive on financials then. We're just kind of a little bit more cautious right now.
And it's great to have you on the program.
Thank you.
Thanks so much. And Miletti joining us there.